Councillor Henry Gent. And firstly, I'd like to welcome Ian Hipkin, Mr. Ian Hipkin, a co-opted member at the back there. Hello, co-opted member of the Council Standards Committee. Welcome to this meeting, Ian. Mr. Hipkin is attending to monitor compliance with the Council's ethical governance framework. There have been a number of membership changes since the last meeting, so I'd also like to welcome Carl Hearn from Tavistock Town Council. Hello, Carl. Filling a vacant spot representing the town and parish councils. Some of you may remember that Ray Bloxham used to represent the towns and parishes. Carl was a member of the Devon Pension Board for a number of years, but vacated that spot to join this committee. I'd also like to welcome Councillor Tony Dempster, who's replacing Councillor Hill. Hello, Councillor Dempster. And also Councillor George Dexter. There you are, George, from West Devon Borough Council, filling a vacant spot for a district representative, nominated by the Devon District Forum. Finally, you've all been contacted about the annual consultative meeting being held this afternoon. This is an opportunity to update members on the fund, as well as giving them the opportunity to ask questions and engage with the committee and officers. Lunch is being provided between this meeting and that one, and it would be greatly appreciated if members could stick around for this afternoon's consultation. That'd be much appreciated. I hope as many of you as possible can do so. I certainly will be. We have apologies for absence from Councillor Jeff Trail and Joanna Cook, and also, as I already said, Councillor Steve Lodge. Thirdly, declarations of interest. Item 3, declarations of interest. Members of the committee will declare any interest they may have in any item to be considered at this meeting prior to any discussion taking place on that item. Members shall not be regarded as having a disclosable pecuniary interest by virtue of being in receipt of a pension, and as this is covered by the general dispensation, it doesn't need to be declared unless it relates specifically to that member's entitlements or payments. That's item 3. We now move to item 4, minutes of the meeting held on the 20th of June. Does anybody have any comments? Does anybody wish to amend or dispute the minutes? I don't see anybody doing so. Is it your wish that we take them as a true record? I see some nodding, and I believe that's agreed. Yes. I'll sign them in due course. Item 5, items requiring urgent attention. I'm not aware of any, and Mark is not. So we move on to item 6, which is the Devon Pension Board meeting held on the 16th of July. And this is just for noting, no formal decision is required.
Just to say, Chair, that there are a number of items in here that do appear as items later in the agenda.
Does anybody have any comments on item 6? If you are happy to note those minutes, we will do so. Thank you. So we move on to item 7, which is the Brunel Oversight Board public minutes. And in due course, I think Mark will be making some further comments about a more recent meeting of the Brunel Oversight Board. But what we have before us is the minutes of the meeting in July, Thursday, the 3rd of July. And of course, at that stage, Brunel and the members of Brunel were aware of the great changes that were coming. And that was, of course, part of the discussion. Mark, would you like to give us any?
So I was just going to say to members, as following discussion with the chair at the briefing and Henry this morning, that it would be just worth bringing this up at this point. So we had a further meeting of the Brunel Oversight Board meeting, which you'll recall is the chairs of all the pensions committees of the funds that are invested through Brunel on last Thursday, which because of the time frame, those minutes aren't available in terms of reporting back to this committee, and will come through in due course at the November-December meeting of this committee. But there was a discussion at that meeting on the issues around Israel, Palestine, and what's going on there. And Brunel explained their approach to this. You'll be aware that we don't own any individual shares in any companies. We own units in funds that are managed by Brunel, and those funds would own the shares in companies. So Brunel do work on looking at areas which are conflict affected, and within their different portfolios, they use a company called Sustainalytics to look at global standard screening and identify companies that are violating or at risk of violating international norms as enshrined in the UN Global Compact principles. And then when they do so, they require managers to avoid or explain for continued investment in any non-compliant or high-risk investments. There are some direct exclusions. For example, any companies involved in the manufacturing of what are termed controversial weapons, which is generally around things like cluster bombs and nuclear weapons if they're selling them to countries outside of the Nuclear Proliferation Treaty. Now, because we've had various declarations recently from the United Nations, it's something that Brunel are reviewing. They're also seeking advice from government and from the National Scheme Advisory Board on how to deal with some of these situations. And it is proposed that many of you will have attended the briefing that was done on the KPMG work that around the pooling situation, that we organise something similar as an online session for members of the pension committees of all Brunel funds on this particular issue, so that you can feed into Brunel on any action that you think might be appropriate or not. I mean, we've had a lot of lobbying around investments in arms companies in particular that may sell weapons to Israel, but bearing in mind that those arms companies are also selling to UK government and also providing weapons to Ukraine. It's not that straightforward. A lot of these issues are things we would want our government to lead on what the appropriate policy is in dealing with such things, and hence why we are seeking more guidance from government and from the Scheme Advisory Board. But as I say, there will be a session on all of this and the approach that Brunel takes towards it, which we will send out an invite to everybody in due course. We haven't been able to fix the date yet, but it will be around probably the beginning of November.
A question from Councillor Rake.
Thank you for that, Mark. Do we have any idea, sort of a provisional idea of what the sort of quantum of Brunel's possible exposure is? I mean, are we talking like a minuscule fraction of its portfolio or something bigger?
Right. The difficult question with all of this is what are we actually counting? Because we get different lobbying from different people about different things we've had. I'm not sure that the current committee have, but certainly the previous committee had a document that was produced by local Palestine Solidarity Campaign that was about 70 pages thick, that listed a whole range of companies. And I think, for example, one company included that is Microsoft, because Microsoft produce software that ends being used by weapons manufacturers to go into their weapons that might have gone to Israel. So if you look at companies such as Microsoft, we have quite a big exposure to Microsoft. But if we're looking at just directly weapons manufacturers, then that would be a fairly small exposure. So it depends where you want to draw the line. It's a very difficult question to answer from that reason.
I'd like to make a very brief comment that I don't think this is like tobacco companies. This isn't about companies that nothing they do but is make tobacco, or nothing they do is but supply weapons to Israel. So it's not going to be like the tobacco thing, which we have disinvested from. If it's going to be anything, it's going to be something very different. More like the South Africa thing. It's going to be more like an international thing, but if it happens at all. But that's my own personal view. Does anybody? Berto.
Just a comment on what Mark has said. I think this area is proper for government to deal with. As a pension fund, I think we have to be very circumspect about what we do, because as you have said, we've got conflicting views among the members of the fund. But having said that, I think the current way of dealing with it through Brunel is probably the best.
Thank you, Roberto. And in fact, we haven't got any choice. We have to deal with it through our pool, which is a fast changing situation, which we're going to be talking about later. So
yes, I would just say that the Brunel Oversight Board were comfortable with the way that Brunel were handling this at the meeting last Thursday.
Well, thanks very much, Mark, for updating us on that, because I know that pensioners and fund members and our own residents are all asking about it. So I'm glad that with everything else going on, time has been found to deal with that issue. Are you happy to note the minutes of the July meeting? I see nodding. So I think we've done item 7. So moving on to item 8, the pension fund annual report and accounts, which I thought was an absolutely superb report, in my opinion. Because if you were parachuted into this committee and didn't know anything about it and read that report, you end up knowing a hell of a lot of, it's very comprehensive, very useful. And although I've been on the committee for 4 years, I learned a lot reading it, and I'm going to take it home and read it again, because I think it answers the questions that people want to ask. But I expect Mark's going to take us through the report.
Yes, so the annual report has been put together in accordance with SIPFA guidance and includes a statement of accounts for the pension fund and details of the investment and administrative performance and activities undertaken during the year. So a few highlights: we achieved a 3.7% investment return, which was above the LGPS average and would have been higher but for the market falls in late February and March. We had made further investments from our local impact portfolio during the year. The report also provides a comprehensive analysis of our stewardship and responsible investment activity over the year, as well as showing how the weighted average carbon intensity of our portfolio has reduced over the year. And we also achieved the target to have 5% of the fund invested in renewable energy infrastructure. Peninsula Pensions achieved 96% of high priority tasks and 92% of all tasks within the time frame set by the disclosure regulations. So the pension fund statement of accounts also form part of the Devon County Council statement of accounts, and therefore it is formally the responsibility of the audit committee of the county council to approve the statement of accounts. The responsibility of this committee is effectively to approve the rest of the content of the annual report. Now the audit committee are due to meet on the 29th of September, but not quite ready for them to approve the accounts at that point, so it probably won't happen until November now, and we're still waiting the final conclusion of the external audit of the accounts. So we will be asking you to approve the annual report subject to the approval of the statement of accounts by the audit committee and completion of the external audit. We generally have external audit reporting back to us on their audit findings report, which we would bring to the next meeting. Just to say also, if anybody reads through the report and finds any typos in it, please let us know and we'll try and get them right before we put the final version on the website. The annual report is also submitted to the Financial Reporting Council as part of securing and retaining accreditation under the UK Stewardship Code for the work we do on responsible investment and acting as good stewards of the assets in which we invest and how we report on it. And we have to do that by the 31st of October to meet their schedule. So we would also ask the committee to approve submission of the draft annual report to the Financial Reporting Council, complete with all the stewardship activity that is contained within it. So happy to answer any questions.
Thank you very much, Mark. Any questions? Yes, Councillor Mitchell.
Could you just take us through the audit trail again? In effect, this document is externally audited at the moment and will go through the county council process as a part?
Yes, that is correct. So the formal position is that, and it's something that we've been talking to SIPFA and government about in terms of whether the pension fund statement of accounts should be a completely separate thing from the county council set of accounts. But under current regulation and guidance, the pension fund accounts also have to be incorporated within the county council set of accounts, and it is the county council's audit committee that formally, under regulation and guidance, has the responsibility for approving that and receiving the external audit. So that audit will only really cover the actual statement of accounts bit of the report, which is the bit that starts on page about page 119 of the document that you've been given. So the rest of it is not subject to audit as part of that. Although what the auditors will do is they will provide us with what's called a consistency opinion, which basically says that what we've got in our annual report is the same as what's in the county council's accounts as far as the statement of accounts bit is concerned.
As a supplementary, is there any role for the other contributory local authorities in order to vet or audit or take any part in this, or do they automatically just have to accept what the council have given them? Do they have sight or comment upon the auditor's comments?
No.
So there is
Do you want to?
So the auditors of the other employers, so that if we use a district council, so the auditors of the district council's accounts, they rely on the work of Grant Thornton that have audited the pension fund. So when the Grant Thornton have finished auditing the pension fund as a whole, they will then write to the auditors of the individual employers, the districts and other employers, passing on either their confidence or raising any issues that they may have. But it's a one-way communication from our auditors to the individual employers' auditors. The individual employers don't have an input. It's an external review only. Hope that's helpful.
Any other questions? Yes.
Well, thank you. For somebody who has virtually been parachuted in, I'd like to echo your comment about, I read this and I found it absolutely eye-opening. It's really, really good. I just wondered if you could you could answer the 101 question on page 6, which is it turns about that Devon and the universal average, we're not meeting the benchmark. And I would just comment at the bottom, give an explanation of why, and it talks about the active equity portfolio as being the main reason. I'm just wondering if you want to say a few words about why, how we're balanced so that we're not meeting these funds.
So the fund benchmark is a weighted average of all the individual portfolio benchmarks. So if we take the if we take the global high alpha portfolio, we have 5% of the fund allocated to that. That is measured against the MSCI World Index. So effectively, the MSCI World Index will form 5% of the total benchmark of the fund. So I think what we've had recently is that we've had a equity market in particular that has been strongly driven by 7 individual companies, which known as the Magnificent Seven, which are all the tech companies: Microsoft, Apple, Nvidia, Facebook, or Meta, as they're now called, etc. And where we've got active managers who are trying to pick stocks that will outperform the market, they have found it difficult to outperform the benchmarks because the benchmarks are so heavily dominated by these 7 names, and because the indexes are so heavily dominated, the active managers will not want to put all their eggs into that basket and will be generally have been underweight to those names, and that has meant that most of our active equity managers have been below benchmark, and that then leads to our total fund return being below the fund benchmark. This is not unique to our fund. It is a phenomenon that's across not just the local government pension scheme, but across markets generally, that active managers are struggling to beat benchmarks currently. It may be that going forward, and past performance is never a guide to the future, which is a stock phrase that we always use. It may be that in future that trend reverses, particularly if the issues that Councillor Rake was referring to in the briefing earlier come to pass, where particularly these 7 big tech names are seen to be a bit of a bubble, and then equity markets may correct, and that is the time when active management may come back to the fore. But as it points out, we have performed better than the average LGPS fund over each of the last 3 years and now 5 years, and so I think we see that as a positive.
We've been outperforming the other LGPS funds, even if we haven't been outperforming the market. Roberto, next question.
Yes, this is actually pertinent to what has just been said by Mark. A straw in the wind at the moment, and it's been announced by the Prime Minister, is that we're going to have an investment of 150 billion in AI. I just caution the committee to ensure that we don't rush down on that one.
Noted. I don't see any other questions, and we have got quite a heavy agenda, but it seems a shame to pass so briefly over such a good report, but I think it does answer the questions that members of the public and members of the committee might want to ask. What do we do? What are we invested in? What are we doing? It answers all those questions, and I thought it's a very good report. So what you are asked to do at this point is to make a decision, and it's in 2 parts, but I think we could probably take both parts together. So I'm going to read it out. To approve and adopt the Pension Fund Annual Report and Accounts for 2024 to 2025, subject to approval of the Statement of Accounts by the Devon County Council Audit Committee and completion of the external audit. That was part A. Part B is to approve the submission of the unaudited Pension Fund Annual Report and Accounts to the Financial Reporting Council for assessment against the requirements of the UK Stewardship Code. And I need a proposer.
So moved.
Yeah, proposed by Councillor Rake. Any seconder out there? Do we need a seconder? Yep, seconder, Roberto. Thank you. All those in favour? Anybody against? Any abstentions? That's carried unanimously. Thank you very much. So we now item 9, the investment management report. And once again, Mark Gaylor is going to take us through that.
Yeah, so the table on pages 25 to 26 of the report shows the current value of the funds split between asset classes with the allocation of each asset class compared to the target allocation. As at the 30th of June, the fund value stood at 6.35 billion, which was an increase to the fund of 4.1% over the quarter. Equities remain overweight following a positive quarter, and as Anthony said earlier, this has continued over the summer, and therefore we are proposing to withdraw 25 million from each of the passive allocation and the global high alpha portfolio and reinvest the 50 million into index-linked gilts, which will then bring that up to the target 5% allocation. I mean, Anthony might want to comment when I've finished, but I think that's in line with the briefing that he gave to the committee earlier about where bond yields are, and they look cheap, whereas equities are beginning to look expensive. So while we need to stick with our target allocations, where we go above allocation on something that looks expensive and we're below on something that looks cheap, then we need to reallocate those funds accordingly. The graph at the bottom of page 27 shows the investment performance over the last quarter, 3 and 5 years compared to the fund benchmark and the LGPS average. And that's primarily, as we've just described in terms of the figures in the annual report, that we are below benchmark but above the LGPS average. And the biggest underperformance against benchmark was on the sustainable equities portfolio and the private debt and private equity portfolios. The private debt portfolio in particular was below benchmark, largely because of the exchange rate issues with the US dollar. We have a private debt fund investment in the US where it has delivered positive returns in terms of its domestic currency, but when you convert those values into sterling, because the US dollar is currently weak, that's produced a negative. But it's still a well-performing fund. So the graphs on page 29 and 30 look at the impact of exchange rates on our investment. We do hedge part of our equity investment, and that has proved a positive, albeit if we'd hedged more, we would have probably done even better. Section 5 of the report looks at the budget position, and the analysis of that is shown at Appendix 1 on page 37. We expect everything to be in line with the forecast budget at this stage, with the exception of income from the proceeds of class actions. And class actions are where claims are made against companies or regulatory authorities who are accused of acting improperly in a way that has eroded the value of our shares. And sometimes cases go on for years and years and years and years. And so, whereas I said earlier, we don't own any shares directly, in the past we have done, and we have received proceeds equating to £900,000 over the last couple of months, where settlements have been reached on 2 cases that went back to the last decade. So that's all good news for the fund. Section 6 shows cash management over the quarter. We still hold a reasonably high level in cash compared to what our target allocation would be. We may need to start looking at other liquid solutions if rates come down further, but while the Bank of England has been reducing rates, we're still achieving upwards of 4% on cash investments, and that cash is largely there waiting for commitments on our private markets allocations to be called down. Final section of the report then details voting and engagement activity over the last quarter. The April to June quarter tends to be the busiest, well, it is always the busiest for company annual general meetings. So there are a lot of meetings where votes are made on the shares that are owned by Brunel and Legal and General Investment Management on our behalf. And the Local Authority Pension Fund Forum issues a number of voting alerts where they recommend that we vote in certain ways. And most of those voting alerts relate to issues around climate change and ensuring companies are managing the associated risks effectively. For the most part, Brunel and Legal and General Investment Management tend to vote in line with the LATF recommendations, but where they haven't, it's generally because they believe the company concerned is making progress on the issue, while LATF may have suggested that the company perhaps has not quite yet done enough. So, Brunel and Legal and General like to encourage companies where they feel that they're doing the right thing. However, votes in favour of more action on climate change or human rights or other governance issues rarely succeed if the company management recommends against the proposal. So 20 to 30% vote in favour of a recommendation to disclose more about what the company is doing in terms of climate change and alignment is actually not a bad result. And with that level of support, then companies do take note of the votes that have taken place, even if those votes have been lost. The recommendation of the top of the report asks the committee to note the report, but we'd also ask the committee formally to approve the recommended action to move 50 million from equities across to index-linked gilts.
Thank you very much, Mark. And the first question is from Councillor Mitchell.
I'll ask the question I was going to ask previously because it links into this. On page 27, we've got an equity exposure chart, which would indicate, fitting in line, that the bulk of our exposure was in the North American market. The question I was going to ask, I understood that the government were considering pressurizing through the legal system pension funds to invest more in UK equities, etc. And secondary to that, what do we know is happening about that proposal? Is it just dead in the water or likely to proceed? And secondly, in relation to our UK equity base, I know we have a local impact portfolio, which tends to be with startups and new ideas within our own region. Do we have a positive policy at all of buying equities of companies that are based within our region?
Okay, take that in order. So the pension schemes bill is currently going through Parliament. It's passed its second reading, but is now in the committee stage. One of the concerns about the pension schemes bill, apart from the specific LGPS aspects, was that the government did appear to be seeking to give itself the power to direct pension funds to invest in certain things. An amendment has been introduced by government, so it will expect to go through as part of the committee stage, which takes that out, so that I think the government will continue to encourage us, but I think there was the likelihood of legal challenge if that had gone through, in as much as if the government was instructing us to invest in certain things, that could be seen as going against the fiduciary duty that we have to invest properly in the interest of our pension fund members. So that's that aspect of it. We don't have a specific policy of investing in UK equities. So the local impact portfolio that you referenced is part of our private markets allocation, which is not part of this chart, because that's just looking at our listed equity holdings. So we do have a policy of investing 3% in things that benefit locally across Devon and the Southwest. When we had our strategic review, it was recommended to us that we could look at increasing that from 3% to 5%, and that is part of our medium-term strategy. But because of the pooling regulations and what's going through Parliament on that side at the moment, we would really need to work with our pool in order to make that increase, to find more things to invest in, to take that from 3% to 5%. With the issues that are going on around pooling at the moment, then that's not really a practical option for us to do until we've got the pooling arrangements sorted out and the new pool arrangements in place. And once that's there, then we would look to invest further in those private markets through our local impact portfolio. We used to have a specific allocation to UK equities, which was passively managed. We were recommended to go for a global approach rather than a UK approach. And that UK passive allocation was therefore removed 2 or 3 years ago. One of the issues also with the UK allocation is that the UK FTSE All Share is generally dominated by multinational companies anyway, not specific. So while they may be listed in the UK, they are actually operating multinationally. And there was a very heavy skew in those to Shell and BP in particular, which meant that we were significantly invested in things that a lot of people felt that was a risk going forward from a climate point of view. And so there were various reasons that were taken into account when we removed that UK passive allocation. Also, the fact that the UK market has not performed particularly well over recent years.
Thank you. As I say, I'm just concerned with the cyclical nature of how all the people in our pension fund are effectively working in this area and are reliant on those businesses and companies that pay their business rates and council tax, etc., in this area to sustain their employment. And it just seems something at some stage somebody ought to consider to what extent we have an element of our fund beyond the locality element that invests in those companies that are already sustaining our economy locally.
Mark, am I right in saying that that part of the local impact includes the small and medium-sized companies?
So I think we did this quite well at the training session. So we've got 5 local impact investments at the moment. 2 of those are in renewable energy infrastructure. 2 of those are in affordable housing, and the other one is in providing support to and capital finance, essentially to medium and small businesses to support growth within the area. I'll be talking more about that this afternoon if you're going to stay.
Yeah, just pointing out the obvious, but in the area that a lot of our people look at is how we engage with companies on the voting side. Just a note that most of the problems arise with directors and governance of companies rather than all the other issues, which are obviously as important, but it's useful to see that that is what's happening.
Thank you, Roberto. So, Councillor Rake.
Thank you, Chair. Firstly, I think it's commendable the suggestion that we move the allocation of 50 million from equities to gilts. I mean, there's one thing that consistently frustrates me is when we pay a fortune to investment advisors, I'm sure, and well merited, and then ignore their advice or don't act on it. In fact, I'd go as far as to say we're perhaps being a little bit timid in that, but time will tell. When would be the next opportunity for, if we decided that has been the right thing to do and would remain the right thing to do, when would be the next opportunity for a rebalancing, or is that a dynamic thing? That was my first question. And the second question, just so that you can take them as you wish, is just, you said that we'd had 900,000 in class action payments. The report in front of me, I'm perhaps being hard of understanding, suggests a figure of 1.2 million. So 1 million from Chile and 188,000 from Perigo. So I'm just wondering where the difference
those figures are in dollars. The 900,000.
Oh, that's okay. Sorry,
is what they equate to in pounds.
Thank you.
In terms of policy, just technically speaking, we as officers have discretion to move up to 50 million between committee meetings if we feel that the situation requires that. So if we were of the opinion that that was needed to be done urgently, then we could do that. And I would always consult with Anthony before making any such decision. Each committee as well, we will review the position. So in terms of paying advisors and so on, I mean, we paid Reddington, who are external consultants, to provide advice to us on our strategic asset allocation. So the percentage allocations that we have are what they recommended us to as a long-term thing. And I think, as Anthony alluded to earlier, we are a bit of an oil tanker rather than a yacht, in as much as it takes time to turn the boat, and we can't. Timing the markets is a very, very difficult thing. So we stick to our long-term strategy, and then we move money around where the allocations have diverged from that strategy to get them back on course, and that's the way that we tend to work. I don't know if Anthony would like to comment.
Anthony, please comment.
Thank you, Chair. Yes, I mean, as Mark was saying, there is a little bit of discretion to move around in between meetings, but my full-time job before I started giving this kind of advice was as an asset allocator, and I had one client that was based in Switzerland, and they had 4 managers with exactly the same benchmark. And the key decision that they took each year was to take money from the best performing manager and give it to the worst performing manager. And during the year, they gave us full discretion to rebalance the portfolio to their strategic benchmark, because their point of view was that we've set this strategic benchmark because we expect to get a certain level of return for a certain amount of risk that we're taking. And once an allocation moves more than a few percent away from that, they expected us to take the profits, and then annually they would move us all around. So the objective of that particular client was never to be the best performing manager, because you knew you were going to get money taken away. But it worked, and that, I think, is the power of rebalancing. You've got to, you should never take more risk than you need to take, but so you do an awful lot of work to figure out what is an appropriate level of return to meet all of the pension payments and the amount of risk that's required to do that, and then you nudge the tiller every time things move a little bit further away from that. And Mark, I think what Mark's talking about is very appropriate. There's an increased amount of volatility and concern in equity markets, and we are slightly overweight, and we're slightly underweight gilts, which look a bit cheaper. And the ideal time to have done this transaction was when the news turned up in the Guardian and on the BBC News. And actually, I do have a friend of mine who just follows those indicators and moves every time it gets to headline news. The story's out there. I need to do something. So we can't do that. We have to think about things, and we have to be a little bit more nuanced in how we do things. But I think, yes, you saw my presentation. We're selling something which I believe is expensive and buying something which I believe is cheap, and that, I think, is the way to manage it.
Just to note, Chair, that the ideal time to make any investment is in the past.
But just to be clear, Mark, as the value of shares go up, to remain according to our strategic objectives, it would be right to sell shares and buy gilts to stick within the parameters of the strategic guidelines.
Yes, that's so. We are they will bring those allocations back towards what our target levels are.
And that doesn't require a committee meeting to do
Well,
so?
I think as we are here, I think we would welcome the committee's approval.
Any further comments or questions? So it's not actually written on the report that you've received. It's not actually listed as a recommendation, but the decision required is for the committees being asked to approve the proposal to move £50 million from equities to index-linked gilts. Do I see a proposer?
So moved, Chair.
Thank you, Councillor Rake. Seconder, Councillor Mitchell. Oh, sorry. Yeah. Yes.
One question, because I think it's important for us to know, what does that represent as a percentage of the fund? Because to me, we're talking peanuts here in effect in regard to the totality of the fund. I think it just, whilst I haven't got 50 million in my back pocket, in relation to this fund, it is not a significant decision, is it not?
Just under 1%.
So if you look at index-linked gilts, then they're currently at 4.3%. So, and we're trying to bring them back to 5%. So it is about just under 1%.
I was just trying to get.
Anybody seconding the prepared? Yep. Councillor Mitchell. All members in favour, please show. It looks like everybody. Anybody against? Nope. Any abstentions? Nope. Unanimously in favour. Thank you very much. Item 10, triennial valuation and funding strategy statement. Mark is once again going to lead.
I'm going to do a brief introduction. We have our actuaries with us this morning, and they're going to do a brief presentation. But the funding strategy statement is one of the key documents that we're required to have in place. It sets out policies for how we set contribution rates and ensure that the employers provide sufficient contributions to meet liability to pay pensions to their employees. So it's good practice to review the funding strategy statement alongside undertaking the triennial actuarial valuation. So a draft version of the strategy is included at Appendix 1, and the committee are asked to approve the draft as a basis for consultation with employers. So we will then send out the draft to employers for comment, alongside sending them their results from the triennial valuation. And any comments can then be reported back to the committee so that you can approve the final version of the strategy statement at the meeting at the end of February. The report also provides an update on the valuation, and I will hand over to Melanie and Karen from Barnet Waddingham, who are just going to do a short presentation on where we're at with the valuation, which I'll try and get on screen.
Okay, great. Well, we can start whilst we're getting the presentation up, but thank you for having us back. Hopefully you'll remember us from a few months ago when we came in July and tried to set the scene for this valuation process. We're still relatively early on in the process. It runs until the end of March next year, really. So there's still quite a lot to do, but we do have some sort of headline initial results for you today. And as Mark said, we're also going to talk through that funding strategy statement. His cover note is actually very comprehensive in terms of what you need to know and sort of the headlines. So if you don't have the time to look at the whole thing, hopefully you do, but the cover note is pretty good to explain some of the things that really are changing from last time and that we would like input on. But so we won't go into some of the background today, we'll head straight into it. And because, as Mark says, we've only got a short amount of time, I'm going to head straight over to Karen to just talk about what.
Just tell me when you want me to change the slides.
Thanks. So yeah, just the first slide is just to give you an update of where we are in the process. As Mel said, we've still got until the end of March until this is complete. But at the moment, we're preparing results, so running lots of calculations and preparing kind of headline whole fund results. We're also we already have drafted the funding strategy statement, but it is in draft process just now. So, we're going to get feedback from employers to feed into the final version. And we're having, discussions with fund officers just now to, discuss how the valuation is going to proceed and what the results mean and what changes we need to make. On to the next slide, please. So we already gave a bit of an update about the financial assumptions, but we thought we would just give a kind of headline message here. All the changes in the financial assumptions for this valuation compared to the previous one have put us lower impact, lower value on the liabilities. So they've pushed the funding level up from the last valuation. So these financial assumptions are the discount rate. So our expectation of future investment returns has increased. Our expectation of future inflation has decreased, and that's because we allowed for that high inflation at the previous valuation, which has now passed in the most part. And also because salary increases are linked to inflation in our assumptions, that has also decreased. So overall, a decrease in the value of the liabilities from financial assumptions. Next slide, please. Demographic assumptions, we probably didn't go into as much detail at the previous meeting just because these were still being worked on by our longevity team. But the results of that longevity analysis is that we expect life expectancies to be longer than we did at the last valuation. So pensioners living longer means more pensions being paid, which means an increase in the liabilities. Not quite the same impact as what those financial assumptions have made in the opposite direction, but we do think that it seems that pensioners are living longer than we expected at the last valuation. And just a bit of a kind of headline reason why we think that is that we maybe overestimated the impact of COVID at the previous valuations because we were still quite in the midst of it. But now that we're out of the other end, it doesn't actually seem that it's, as far as we can see, having as much impact on life expectancies in the long term. So other kind of minor demographic assumptions to do with commutation and retirement, we've kept those assumptions the same, so the impact on liabilities has been nil. And there's been a slight change in the withdrawal assumption, which has had an impact of lowering the liabilities, but very minor compared to the mortality assumption. Next slide, please. So what does that mean for the whole fund results? So the bars on the right-hand side are the previous valuation, and the bars on the left are the 2025 valuation. So assets and liabilities have increased, but the assets have managed to just tip over the edge of the liabilities. Although we're at 100%, it is a slight surplus. I won't go into this slide too much. I'll just move on to the next one and give a bit of information about why that's happened. So at the last valuation, because the fund was in deficit, they were paying deficit contributions. So this means that overall the contributions that have been coming into the fund have been greater than the cost of accrual, which has an impact of increase in the assets. Although investment returns have been slightly lower than expected. So at the last valuation, we expected fund returns to be about 4.7% per annum on average. And there was a bit of up and down over the 3 years, but on average, the fund achieved 4.4%, so just short of the 4.7 that we expected. The cost of the pensions has increased mainly because of those really high pension increases that we saw in 2023 and 2024. So those will, be baked into the pensions that get paid out forever. Doesn't matter what we are expecting, inflation to do in the future. Those pension increases will impact those pensions and future pensions. So that has increased the cost of providing those benefits to the fund. And as I mentioned, on the liability side, the first point there at the bottom is to do with those financial assumptions that I spoke about at the start. So the movements in those financial assumptions have meant a decrease in the liabilities, offset slightly by an improvements in longevity, so people living longer. So that's kind of how we've moved from that 89 million deficit to 8 million surplus, which sounds a lot, but as Mark was talking about earlier, the fund is huge, so these numbers are small in proportion to the fund as a whole. So yeah, fund level primary rate, this is kind of a key outcome of the valuation once we've thought about the funding level. And because of those changes in financial assumptions, the whole fund primary rate is expected to move from 19.2% at the last valuation, 16.4%. So that is just a whole fund number. It will vary by employer, but that will be the general trend for all employers in the fund. Sometimes the membership profiles of employers can mean that the change might be a bit greater or a bit less, but the general trend will be that the primary rate will be coming down. The next slide goes on to a little bit more about what this means for employers. So the first box, the improved funding position. So what does that mean for employers? Generally, it'll mean that deficit contributions will decrease or maybe will be nil. But again, this is an employer by employer situation. Primary rates will be lower across the fund, but again, the magnitude of the decrease will depend on the employer specific profile. So overall, we're thinking there will be reductions to employer contributions, which will hopefully be, good news for the employers. But there are some kind of key fund considerations that we need to take into account when we're thinking about these reductions. The first one, as Mark's discussed at the start, is to do with the funding strategy statement. So in this document, it essentially provides the employer or the reader with, rules as to how these employer contribution rates are set. So we have to pay attention to this when we're setting employer level contributions. So that's kind of the first part. And then we also want to be transparent. So, the decisions that are made to decide what employer contributions should be has to be transparent, it has to be easily understood. We also will want to consider the rate of any reductions. So as would be the case if these fund results looked very different and we were suggesting that there was an increase in contributions, we wouldn't necessarily just jump 3% up and ask these employers to pay 3% more. So with the same mind, we wouldn't necessarily jump straight from that 19.2 down to 16.4. There might be some stepping down. That's kind of the discussions that we're going to be having with the fund, and this information will be in the funding strategy statement as well. And the fund just has to have mind as well of the cash flows. So as I mentioned, the cost of the benefits has only increased, with these big pension increases. So the pensions that can get paid out are higher than ever. And, if we are going to change the contributions that are coming in, the fund just has to consider balancing off those things to make sure there's enough cash available to pay out those pensions. I think I'll just move on to the next slide, which is a little bit more about the funding strategy statement. So yeah, you will have more information about, well, you'll have a draft and you'll have a cover note on what exactly has changed, but just a very high level note. So the fund has always had a funding strategy statement and we've always reviewed it at the valuation. This year, there's been a bit more of a focus on it because new guidance was released at the start of the year. And so we've had to have a bit of an overhaul on the funding strategy statement just with this new guidance in mind. So the structure's changed a little bit and the content has remained mainly the same, but there has had to be some tweaks. And one part of that was any references to other documents had to be the document basically had to be all encompassing. So any references to other documents, those documents had to be included as appendices. There's been various other changes, but yeah, we just had to make sure that the funding strategy statement was in line with the guidance. One of the points that was, I guess, one of the more major changes was to do with how outsourcings are dealt with now and how employer contribution rates for outsourced employers has changed. I won't go into too much detail on that, but if you want to ask me any questions, we can. And similarly, we wanted to include a bit more about how academies and further education bodies are treated equitably to councils. So, in the past, maybe the deficit recovery periods might be different between councils and academies, and that would maybe be to do with, if we think academies are a bit riskier, we might want to get those deficits in sooner. If we think the councils are pretty safe bet, then we maybe, can give them a bit of leeway on when we're asking for these contributions. But as part of this, we're trying to think of them more equitably. So trying to think of the risk being equal across all. It doesn't mean they'll all have the same contribution rate, but it just means when we're thinking about setting their funding, we think about them the same. And kind of the last key point, which we'll kind of finish off in the next slide, is just about a meaningful engagement with employers. So that was kind of one of the key outcomes of the guidance was, every valuation we do like put the funding strategy statement out for consultation. That's not a new thing, but this time we're just really trying to focus on employer engagement. So rather than just saying it's out for consultation and then nothing ever happens, we are trying to get employers to read it and engage. So this is kind of the plan over the next 6 months or so. The first point being today, sending out a draft to committee, and following any committees, any comments from today, we'll then share this draft with the pension board mid-October, and then during October we'll be sending out employer level results alongside the funding strategy statement and opening up a consultation. And then we'll be attending the employer forum at the end of October to answer any questions that have come from the funding strategy statement. And then over towards the end of the year, just reminding employers about it and collecting any comments. And then into the new year, we'll be, once we've wrapped up those comments and made any changes that we think we need to make, we'll be confirming that with employers. And then, as Mark said, bringing this final version to committee in February for approval, and then publishing it at the end of March. So that was all I was going to say, but happy to take any questions.
Councillor Mitchell.
Thank you, Chair. I just wondered to what extent local government reorganisation in 2028 impacts on any of your decisions here, because being old enough to remember the ones in 1973, there was often an exit from the door by members at the appropriate age because of the arrangements that were available with the amalgamation of councils at that time. And as we all know, none of us will exist in 2028. So I just wonder, is there going to be a sort of bulge in the system, both of people retiring and potentially fewer new members coming into the system due to reorganisation? And does that effectively impact any of the recommendations or decisions you're making?
So we have been considering it. It has been, in our regular meetings. I think there's one of the options was to think about harmonising employer contribution rates for those councils that are expected to become one. So that's something that we could consider in terms of the, redundancies, or, it's hard to make a call on that right now. And it's probably going to be something that comes out over the intervaluation period, and there can be reviews that we can make in the next couple of years, but it's hard to make a decision right now. Do you want to add something?
I think I was just going to say it's good to think about it when we're having those discussions with employers, because they're sort of looking down the barrel of significant costs if there are a lot of redundancies or whatever there might be because of LGR. So it's part of that conversation that we need to have in terms of setting contributions and how their liabilities might change over the next few years. So even though we come along and think about the long term when we're setting assumptions, it's also very important to think about that short term period of the 3 years, because so much always seems to change at every intervaluation period, and this is just another example of something significant that's going to happen in the short term. So yeah, we will think about it and talk to those employers, but obviously those employers don't even really know what's going to happen yet.
Yeah, please come back.
Right. surely that from the development of unitary authorities in the last 20 to 30 years, there must be case studies that are available to us to help you define some sort of range of impact of the establishment of new authorities and the disappearance of counties and districts as happened elsewhere. So I would assume that there
Oh,
should
yeah.
be some case study material available.
Yeah, no, there's plenty of case studies. Other funds have been through it where their authorities have come together through LGR in the past. So, yeah, we have case studies. We know what to anticipate. So yeah, we are fully aware.
Mark would like to come in here.
Yeah, just to add, I mean, we did have discussions about LGR and potentially what we should take into account in terms of the valuation. I think because the outcome is by no means decided yet, it was felt that we should just carry on the basis of what we've got now. Clearly, when new authorities are formed, then that will have to be reviewed at the time. In terms of redundancies and reductions in staff, what we will bring to the committee at some point, which is a separate exercise essentially, is some form of cash flow analysis. Because obviously you've got a position at the moment where you've got, we have employers and employees paying into the fund, and then we pay pensions out of the fund. And if you have a reduction in the number of people paying in, then you've got a bigger gap between what we're paying out and what's coming in. And that then will have an impact on our investment strategy, because we will need to consider investments that give us more income potentially in terms of on a monthly, quarterly basis, so that we can use that to pay out the pensions. So that is an exercise that will come in due course. In terms of the overall liabilities, I mean, in theory, as people are made redundant, if they're over 55, then they are automatically entitled to their pension. But because they are getting it early, if you retired voluntarily, then your pension's reduced if you go beyond your retirement. So effectively, the liability should be pretty much the same. If you're made redundant, then you're entitled to it unreduced. But then the employer who has made you redundant has to pay what's called pension strain into the fund. So we get extra assets into the fund to meet those extra liabilities.
Thank you very much, Mark. I think that deals with that question. There's a question from Carl Hearn.
Thank you, Chairman. Just a question really in terms of your preliminary findings at this stage. Are there any special issues or outliers coming out of the pooling arrangements, either for academies and education establishments or for the town and parish councils, which distinguish them in any way from those of the principal authorities, or is it pretty much the same?
I would say too early to say at this moment. We're kind of just on the whole fund results just now. Over the next few weeks, as we get into October, we'll have more information, but I couldn't say at the moment.
Thank you.
Yes, George Dexter, Councillor.
Excuse my ignorance on this, but we're dealing with large sums of money and it's balancing out. I just wonder what the, if you like, the tolerance or the error margin on either side of these things are, and how this would affect any projections going forward.
Take that question. What's the tolerance level?
Sensitivity.
Sensitivity.
Yeah.
Oh, right.
Melanie is going.
Well, so I'm not, I think I'm just trying to,
No, just to see if you have it. Like,
in terms of if we change some of the assumptions. Is that your question? What would?
Yes, you're projecting the 100% funding on the basis of the assumptions you've made. I'm just wondering how sensitive the outcome is to the assumptions you're making and how that panned out in the past, basically.
Well, I think historically things have been improving for the fund. If you look at the actual sensitivities on the numbers, it is quite sensitive to that discount rate. If you change it less, now I've got a slide on my other pack. If you change that discount rate by 0.1%, so brought it down to 5, then it would be, then you'd move down into a deficit position. You'd be then around 99% funded. But I think that's why we need to have more conversations moving forwards around the contributions. It starts to become a bit less actuarial. Like we can say, or the numbers say that contribution rates are possibly around 3% lower, but it is very sensitive to some of these assumptions. So you do have to approach the contribution setting next stage with a bit more caution, because it is very sensitive. And as we've seen over the last 3 years, the returns have been, well, all over the place. Have been a huge range, and a huge range by funds as well, not just within funds. So it is sensitive, and that's really why we have to think carefully about the contribution setting stage bit, because I think people get very focused on the funding level, and it's great that we've snuck into a surplus position, but it's by no means over. There's still a long way to go, and that we're going to be paying out benefits for a very many number of years to come yet. So it's not about resting just yet.
Can I just add, I mean, there is a prudence built into that discount rate, isn't there? So
Yeah.
you've calculated based on our investment strategy what return we should have achieved, and then the discount rate has got an element of prudence, so it's not that full amount. There's a reduction in the discount rate to allow for that element of prudence.
Yeah, just for completeness on that then, when we talk about prudent, it's about saying how often do you think you're going to achieve that investment return over the long term. So the rate that we've set is saying actually around 70% of the time, every year, we on average will get about the 5.1%. So there's going to be years that you don't, there's going to be years that you achieve much more than that, but on average around 70% of the time we think you are going to get the 5.1. But you'll again see a range of discount rates and outcome of this valuation round from the different funds, but sitting at 5.1 is actually somewhere around in the middle.
Do you want to follow up on that?
Yes, I mean, that, I think hit the nail on the head because the presentation talks about reduction in employers' contribution. I was wondering about the sensitivity, about how we decide what that should be and whether we're going to sell ourselves short if things happening. And I think you answered the question.
Thank you. Thank you very much. Question, I think, from Councillor Rake.
Yes, thank you, Chair. Sort of casting our historical net a bit further back into the past. I mean, obviously the changes introduced by Nigel Lawson and then Gordon Brown created almost a structural deficit in defined benefit plans, which is why they went out of fashion. And it looks as if we have at least finally sort of stunned that deficit beast. But I think, as you've said, it's very important. Kind of, it's only stunned, and not to take our to say, "Oi, you know, we're free and clear," and let's. So it's just an observation, really, Chair, that we, you know, really need to make sure that we can bake in 100% funding as much as possible, and not sort of say, okay, that's it, we've done the work. And just on Councillor Dexter's point, I mean, in a way, there's never an outcome. We're all, the projection is 40, 50 years ahead and always will be. So it's really hard to sort of to notice. Just. Yeah.
Thank you very much. So don't be complacent is what I think I'm hearing. Any further comments or questions on the 3-year triennial valuation and funding strategy statement? I'm not seeing any, and we do have to make a decision. It's in 2 parts. I'll read out the whole decision. We're being asked to approve the engagement plan as set out in Annex D of the draft funding strategy statement. And the second part is we're being asked to approve the draft funding strategy statement set out at Appendix 1 as a basis for consultation with employers. I haven't heard any negative comments on that, so I'm hoping, do I have a proposer? Anybody prepared to?
So moved, Chair.
Yeah, Councillor Rake, seconder. Yep, Councillor Dempster. All those in favour? Anybody against? No. Any abstentions? No. That's unanimously carried. Thank you very much. And thank you very much, Melanie and Karen. Thank you both very much for presenting on that. Item number 11, fund member survey. So this is the survey which we are sending out. Well, Mark, are you going to introduce? Yeah.
Yes, so 3 years ago, we undertook a survey of fund members and their views on how we manage the fund's investments. And we have a fiduciary duty to maximise the financial returns we achieve on our investments at an appropriate level of risk. But we can. Oh, yeah, I can get rid of that. Yeah, we have a fiduciary duty to maximise the financial returns we achieve on our investments at an appropriate level of risk, but we can take into account non-financial considerations if there is evidence that fund members would in general support those considerations. So undertaking a survey will help inform whether that is the case on certain issues, although we acknowledge there was also a level of participation bias in these things. We agreed that we would look to undertake a similar survey to the one we took before every 3 years, and we've got to that point, so we are asking the committee to approve the carrying out of the survey. We have learnt some lessons from the survey we carried out previously and modified and added questions based on the feedback we got from the previous survey. The Pension Board considered the survey at its meeting in July and were happy with the questions, but suggested that it should be posted out to those members who have opted out of receiving electronic communications. So the previous survey, we only communicated electronically at negligible cost. So posting it out to around 15% of fund members would add around £25,000 to the cost of the survey. So we would welcome the committee making a decision on whether we should do that.
Councillor Rake and then Carl Hearn.
2 questions then, Chair. The first one is before we take a view on whether or not we should spend 25 grand on stamps. What was the response rate to the last survey? How many came back in from the ones?
The response rate was about 3% of fund members, which was actually 3,800 and something replies, which we thought wasn't actually bad, and it was comparable to surveys that other funds have done.
But 3%, so that means 97% of wasted stamps, essentially.
So I think that's what I'm saying about participation bias, that you have to accept the responses that you get to these. Certain people are more inclined to respond than others, but it's still, I think, a useful indication of where people are.
Yep, Councillor Rake. Yep.
Yeah, the second question, and this is something I've been sort of struggling to get my head around, is if the investment performs well, the members don't see any direct benefit from that. Within certain limits, is my understanding. What they receive is fixed, irrespective of the performance of the pension of the funds. Is that before I?
That is the case. So benefits are set in statute and regulation. So then, from that point of view, the investment return does not specifically affect people's pension. It does affect the cost to employers who pay the difference between what we achieve and what we don't achieve. Having said that, there is a mechanism set trying to think what it's the cost cap type mechanism, whereby every valuation, the government will review the total cost of the LGPS, and if it is deemed to be the cost of the LGPS is deemed to have gone up above a certain cap, then they then would look to reduce the benefits to bring it down back below that cap. So there is the potential, if we don't achieve the investment returns, clearly what we don't achieve in investment returns is what informs the cost to employers and so on. So if we don't achieve the investment returns, then in the long run it could affect future benefits, although anything that people have earned to date would be unaffected.
So I suppose my concern, and I think absolutely we should consult and communicate with the members of the fund as much as possible, but I suppose my concern is that it creates a sort of moral hazard. They could encourage us to make investment decisions because they're effectively insulated from the consequences of those decisions within the cost cap limits. We could be, their responses might have real consequences which would be borne by the member councils rather than by the members themselves.
Which is why we would report it back to you as useful information, but it's not a referendum. It's not there's deliberately no yes, no questions. It's not a referendum to say yes or no, and then we abide by the result of that. It is there to provide information to the committee essentially on what the fund members think about what we're doing and what we should be doing.
Thank you.
Thank you. We've got Carl Hearn, and after that, it'll be Michael Daniel online. Michael, you'll be next, and then it'll be Councillor Mitchell, and then Roberto after that. So Carl Hearn.
Thank you, Chairman. If I may, 3 questions which flow from one another and then an observation. The first question, which rather flows from the observation that was just made, is in terms of the information which is sent with this, is it made clear that this is to, if you like, inform the thinking of the investment strategy, but is not to direct it, so that those who are responding are clear what the status of this actually is, and that the fiduciary duty remains the overriding obligation which is placed upon the committee and council?
Yes, so we will set up a web page, and clearly the same information would need to go in anything posted, which will set out the context of it and then provide the link to the survey to complete.
Thank you. Second question is, and you'll be familiar because I raised this at the board previously, you've got 23 questions, 7 of which are on climate change. So is this actually a climate change survey, or is it a survey? I mean, there's 2 which are about investment strategy, which directly refer to that, and 7 which refer to climate change. I'm just wondering, in terms of the balance, and we should have climate change in there, but is 7 proportionate to what we're actually trying to achieve?
I think that's reflective of the fact that that's the issue that we've historically been lobbied on the most, and therefore that's what's in. I think we've actually broadened it slightly compared to the last time we did the survey. I think the last one was even more climate focused than this one. So we've had 1 or 2 extra questions in that have, I think, broadened it out. I think there's a balance to be drawn in terms of how many questions you ask, between making sure you're asking the things that it's useful to get an answer to, and not overwhelming people with too many questions so they get fed up and don't respond.
Very diplomatic. Thank you. Final question before going to the observation. Question 15, I just think is one of those, have you stopped beating your partner? Answer yes or no. It doesn't work in the context of where you're at or where things are at the moment, because it's asking, do you support, broadly speaking, arms manufacturers who supply conventional weapons to countries including UK armed forces, US, Ukraine and Israel? Now, the difficulty is anybody who is supportive of, in general, supplying the armed forces in a time of turbulence may actually have a very different view when you add Israel in the particular circumstances which are outlined recently in relation to UN pronouncements. We've got an ongoing case going through the International Court of Justice. I don't know that you can support the question and not support the Israel bit, which means you're going to get a flawed answer. You can support the Israel bit and not support the question, which means you're going to get a flawed answer. I wonder whether or not, for the purposes of this one, we can either take "and Israel" out, or we can come up with a different form of wording, which is going to make it less difficult for someone to answer that. Because at the moment, I could answer that in two completely different ways.
If people want to come up with alternative wording for questions, then
Can I?
I'm happy to consider that. I'll let Henry, but I think it just demonstrates. I mean, that is, again, that's an issue that we are being lobbied about quite intensively. But I think it's trying to show that, I mean, it is, if you ask people, should we divest from companies that are supplying Israel, they'll say yes. If you ask people, should we invest in companies that are supplying weapons to Ukraine, they'll probably say yes, but they are the same companies. So what do you do? That's really the basis of that question, is trying to make it clear that it's not an easy answer.
Sorry.
No. Well, I've got a suggestion, unless you have. Well, that there are some people who think we shouldn't be invested in any arms manufacturers at all, but I think they're a small minority. But I think you could clarify that by just saying arms manufacturers.
Fine.
And then have a separate question, if it is the wish of this committee to do so, which would say something about Israel. Now, the Israel issue, as Mark has alluded to, is extremely difficult. It's not like tobacco. It's the companies that are being accused of helping Israel are Microsoft and Google in providing specific services. It's what we invest in. But it's a really difficult issue. But there could be a separate question that said something like businesses who support companies who are involved in breaches of international humanitarian law in the occupied Palestinian territory. So that would be companies involved in breaches of international humanitarian law in the occupied Palestinian territories. This is just for guidance, this questionnaire. It's just to get a sense of, are there people out there who care or not? And we could ask a question like that if that is the wish. But I'm afraid there's other people who want to come in, but
no, I appreciate that. Thank you very much. And then and no problem with that. Maybe just companies involved in breaches of international, selling to countries with breach of international law. In relation to the electronic via the postal, I don't think we should be disenfranchising 15% of our membership, but there is a cost associated with that. If the decision is not to go with postal, I'd strongly suggest an equality impact assessment is undertaken to actually make a meaningful evaluation, which comes back to us as to what the implications of that are. I think there is also another route potentially. Now, this won't bring everybody in, but bearing in mind that some of the people who haven't gone electronic haven't gone because they don't want to be having to access their documentation on Scheme. They actually want that in paper. Can't you just have a subsidiary set where people don't, because at the moment you're saying, if you want to participate in this survey, you have to receive all your documentation online. We might want that from an administrative point of view, but if our members don't, is there a way in which they can participate in the survey in future where they give the email address, but they don't actually have to opt into all electronic communications? And that would also provide you with another mechanism. And my guess is that 15% would probably reduce to about 5% at that stage. Thank you for indulgence, Chairman.
thank you. And now over to Michael Daniel, who's online and is one of the representatives of the union and retired members. Daniel, over to you.
Thank you, Chair. My question or comment would be on question 11 in the proposed questions for the survey, and that it unintentionally creates an artificial dilution of responses, in particular to people who may have a view on climate change, because it asks you to rank the most important issue, but there are 3 possible answers they could put first for climate change. There is investing in companies that are seeking to transition, then the option to reduce the carbon footprint of the fund's investments, which both mean the same thing, as far as I understand it. And then thirdly, engaging with companies on a wide range of responsible investment issues, e.g. climate change, human rights, etc., which is again the same thing. So I would propose you get rid of investing in companies that are seeking to transition and the option reduce the carbon footprint, and then just keep engaging with companies on a wide range of responsible investment issues, because then that covers a wide range of ESG and it gives us a clearer answer on what percentage of people who respond are interested in ESG. And then we have the following question, question 12, which then asks them to rank that, essentially. Because right now, as happened, I think in 2022, we had a lot of people put maximize investment return as their first option. And then it was a bit of a muddle with other ones because there were many different ways they could say, my first choice is ESG.
Okay. Okay. Thanks very much. Go on, Mark.
If I could say, I mean, I think they are different. So if you are motivated to want to do something on the climate change issue, there are different ways that you can tackle it, and those are effectively different ways of tackling it. So you can take all your money out of high polluting companies, or you can engage with them, and there is evidence around that engaging actually has more impact on actually getting people to reduce their carbon emissions, and investing in companies that are seeking to transition their business is a more positive thing than just reducing. Yeah, I can see the point. I could take one of those out if you.
Yeah, I think
if that's what the committee wants to do, but
so.
I think
The issue.
maybe on reading it, it may not be quite conveying what I thought it conveyed, which is that, I mean, one of the things that we can do is invest in things that actually are making a positive contribution, such as manufacturers of wind turbines, which is perhaps a bit different from transitioning your business, which is what the actual thing says. So yeah, I could take one of those out if that's what the committee wants to do.
Thank you, Michael. We can see your point. You can read things in different ways, can't you? This is a problem with questionnaires. So I think Mark is going to look at that one. I think it's Councillor Mitchell next.
Thank you, Chair. I'm concerned generally about this one because, in effect, we're talking about investment, but in fact, we're asking people a lot of political small p questions of their views on these. And the large majority of these are serving members of our authorities who are supposed to be politically neutral on their issues. And I'm concerned particularly if we are a membership body, if we do not know the names of our members and their details of how to contact them, why we are requiring people to name themselves and give their national insurance number. They're quite happy for their year of birth or whatever, because that give you a demographic representation from the people returning. So I think asking for people's names and national insurance numbers is a hindrance to people participating in this, particularly for people who are serving authorities, many some in sensitive positions where effectively thus you're asking about investment, you're asking about investment in a political nature of what your agenda is before you make your decision on investment. So I just think if we're going to proceed with this, we need to make this an anonymous one, because we have the details of these people, so we can email them and we can post to them. Why do we need to ask them to tell us who they are?
So this is covered by privacy. So people are asked to supply their name and details purely so that we can double check that they are members of the pension fund. Because the survey is put up on the fund's website. So in theory, any members of the public could answer this survey, not just members of the pension fund. By putting that on, it enables us to make sure that we are only taking responses from our actual fund members, but everything is anonymized before it is used, essentially. So nobody's comments will be attributed to them. Once the check has been done, then that data is effectively removed from what we're producing, and we can make that clear if that's helpful.
Just concerned about data leakage in that particular situation. You know, the number of us who've had hacks on British Airways, Tesco's, or whatever you've got, you're always hearing that your data has been released, and it just does concern me that if you wish people to give their views, I think there should be a greater anonymity if possible.
We have all this data. I mean, we have all their data because we use it to sort their pensions out. So it's not really giving us too much more data. And as I say, none of this will then be matched up when it finally comes in.
Thanks, Mark. Roberto.
Yes, I do think that Michael's idea is excellent, and I think you picked it up. The question of drawing up questionnaires is one of the most difficult things I've ever done professionally, and I sympathise with the difficulties that you're finding yourself in. But I think we have a fiduciary duty, and I think it's important that we can demonstrate to others, particularly government, that we are actually listening to the members of the fund. And we have well over, I think it's 100,000 people between beneficiaries, contributors, and those who are temporarily out of the fund, so that we have to also be aware that there are organizations lobbying outside that are pushing certain ideas on us. So I think in principle, it's an excellent way of doing it, but I think we ought to iron out the various difficulties that we've discovered.
Well said, Roberto. I think I want people to be happy to be members of the fund and to feel some sort of engagement with it, and to be proud to be members of the fund. And I want the residents of Devon to be proud of the fund. So I do want to engage with the fund members. That's my personal opinion from the chair. I'd actually like to comment about the postal thing personally. I see that if 3.2% of the responses, if 3.2% of the people out there are going to respond, and there's 22,500 people who will only take a postal one, it's going to cost £31 each. I think I made it. So I personally don't think it's worth it, but yes, come in, Councillor Dexter.
Well, that was the first thing I'd said as well, but 3.1%, I think it says in here, was the response rate somewhere in this document. As a question about, have we thought about how to increase the response rate anyway, regardless, because sending something out by post will not necessarily increase the response rate, which is the important thing. And do other people do it? Have we consulted about how other people do it? The second point is, as a retired, partially academic, doing surveys is really, really difficult. And the first thing you have to say is we're trying to get out of it. And the sort of question I'd ask, what did we get out of the last survey that we did? And I'd be it's a genuine question. I don't want the answer to now, but I'd be genuinely interested to see what we got out and how we responded to it, and then take that as a lesson about how we create that question. Because I'm sort of listening to the debate, and I'm in total agreement that simply responding to people who lobby us is not necessarily the best way to generate a question. So I would absolutely commend doing a survey. Absolutely. Setting the questions is important. It depends on what we're trying to find out. So it's really, that's a question I really want to get at. What are we trying to get out of this? And how will that translate into our investment policy or engagement with members? I'm not expecting an answer to that, but except in detail. But those are the issues, I think.
Thank you very much. I'm a bit worried about time, actually. We've got to keep moving. So are there any further comments on this? I'm not seeing any. Yeah, I welcome to the meeting, Councillor Cook, I think it is, Five Cook, sorry, and not sure if you're a member of the committee. What is the state? Is Councillor Five Cook able to?
So it's understanding orders. It's at the consent of the committee. Normally that's chair's discretion. It's up to you, really.
I'm happy to agree for you to speak. Yeah.
Coming from a rural area where a lot of my people don't have computers, obviously it's important to get their views. But 3.1% views from spending the amount of money you have sent out, I personally think is a very poor use of money. Also, I would say that I totally agree with others here who think that you do hold people's data, but you don't hold their opinions. If you tie people's opinions to their data, it's no longer impersonal. It's no longer their own opinions, but kept to themselves. So I think that if you want to do, send out and ask people where they want to spend their money, it should be totally, unanimity. Thank you.
If it's helpful, if I could just explain how we deal with this. So all the responses from the surveys go into a spreadsheet. Then we check the names, national insurance numbers against the data that we already hold and get rid of any that aren't members of the pension fund. When we've done that, we then delete the columns that have the names and the national insurance numbers in. So we just hold the data, the responses to the survey in an anonymous form. So once we've done that checking exercise, that data is then permanently deleted. So we do not retain any of the data on an attributed basis.
Thank you very much, Mark. I think we should move on to vote on whether to get on this, and I think we can do it in the three parts which are outlined as set out.
I do have proposals for amended wording under the approve the proposed content of the survey to reflect some of the member comments.
Fine.
That'd be helpful.
Okay.
So obviously A is approve the undertaking of a fund member survey. B, approve the proposed content of the survey subject to, then part one of that would be the amendment of question 15 to refer more broadly to arms manufacturers and the creation of another question directly addressing arms manufacturers involved in the supply of weapons, either to Israel or for use in the Palestine region, something like that.
I think the problem I would have with that is, as I said, you can't divorce the two. It's I mean, if you want to get rid of the reference to particular countries in that question, I think that's fine. But if you want to ask about divesting from and you want to be specific to that particular issue, then you can't isolate that, because as I said, I mean, arms manufacturers supply. There's not an arms manufacturer that just supplies Israel. It doesn't supply other people. So if you want to divest from arms manufacturers, then that's, if you want to divest from people who are supplying Israel, then you need to divest from arms manufacturers.
Can I suggest
it's
yeah. Can I suggest another alternative for B, which is approve the proposed content of the survey subject to delegated powers to be reviewed by the chair of this committee, which isn't me, and Mark Gaylor or something like that.
Officers in consultation with the chair is, I think, the usual form of words for something like that.
That's fine. There is a second part. I mean, if you don't know if you want this approved subject to the amendment of question 11 to remove a duplicate reference to the carbon footprint / climate change within the options provided to seek further clarity or something like that. That aspect be acceptable?
I don't mind either way, but you could bake that into the same thing.
That's fine. I mean, I can
Up to the committee.
Okay, I can wrap up those two things in the discussion, and then maybe the part B will be subject to final confirmation with the chair in consultation with officers. That'll be okay. And then C is obviously decide whether or not to send out the electronic communications. That needs to be changed to a yes or a no.
Councillor Rake, do you want to comment on the vote?
Yes, please, Chair. I think, with all due respect to Councillor Lodge, I think it would be more important that this should be in consultation, at least with the chair and vice chair, because you've been here and you've got the temperature of the room, which even if he watches the recording through, which I'm sure he will. Hi, Steve. I don't think Councillor Lodge would have such his finger quite so close to the pulse. So I'd like you to be involved in that process if I can thrust that upon you.
Thank you.
Chair, could I suggest we take the vote by A, by B and C? Because people might have different opinions on different elements.
Exactly. That's what I'm suggesting. So part A, are we going to have a survey at all? So to read it, approve the undertaking of a fund member survey on the management of funds investments. Do I have a proposer for that? Yep, Roberto, thank you. Seconder. Yep, Councillor Rake. All those in favour, please show. Yep, I think that's everybody. Anybody against? No. Any abstentions? No. So we're going to do a survey. Part B. Do you want to suggest a wording, Fred?
Well, I think if someone wants to move the approval of that the committee approves the proposed content of the survey, subject to final approval, or sorry, the committee delegates the approval of the proposed content of the survey to the chair and vice chair in consultation with officers.
I think that is the best thing to vote on, in my opinion. I get the sense from the room that, and I think I have a proposer over here. Are you proposing that? Yeah, Councillor Dempster, seconded by Councillor Mitchell. All those in favour, please show. Thank you very much. Anybody against? No. Any abstentions? No. That's carried. Part C, whether it should be posted out. Decide whether the survey should be posted out to fund members who have opted out of electronic communications at a cost of around £25,000. So
yeah, my suggestion might be if anyone wants to move it, propose it either way. So if we have a seconder, then vote, and then that will lead us to whether or not there's
Councillor Mitchell. Okay, so not post out.
So you're sorry, yeah, your microphone wasn't on. So you're proposing that it's
proposing that we delete
not sent out.
Yes, we do not proceed with item C.
Any seconder for that? Yep. I think, was that you, Robert? No. Anybody seconding? Yes, Councillor Dexter. All those in favour of not posting?
I have an amendment, if I may, sir.
Yeah.
Yes.
And the amendment would be subject to the satisfactory outcome of an equality impact assessment.
Is that a big ask or a small ask? I don't actually know.
I wouldn't have any. I mean, do we have a seconder for that amendment?
Do we have a seconder for the amendment?
May I just speak to the amendment, sir?
Yeah.
I think the thing is we've got 15% of our cohort in payment here. We don't know what their demographic is. We don't know whether or not they just are choosing not to engage or whether or not they are unable to engage. We don't know the reasons for that, whether that is about health, whether it's about accessibility to the internet or to those mediums, and we don't know whether or not that actually relates to any protected characteristics. And in those circumstances, 15% of all of our all those people in the scheme is a substantial number. And I think we ought, as a matter of policy, to respect that position, because in fairness, we're not just talking, I mean, at the moment, we're just talking about this survey, but we're also talking in more general terms about whether or not, in terms of other communications, those people may actually be disenfranchised from their access to the scheme.
Yeah.
So there are tens of thousands of people who are affected by this, and I
Okay.
really would invite the committee to consider undertaking that piece of work.
Thank you
So-
very much, Carl.
Councillor Rake did second that. So
Yeah,
the process would be if we vote on that amendment being accepted or not into the substantive motion.
Yeah.
Are there any other, sorry, sorry, I think.
so
vote on-
does anybody else want to speak on that amendment, or do we go
Could I
to a
just
vote?
ask a question about it? Normally in officers' reports, other authorities, you get a section relating to that within the officer's report, human rights, et cetera, signed off by the various officers of the authority. What I'm unclear about in relation to this particular item, and particularly the work of this committee and its relationship, we haven't got a legal officer here, is whether, because of the nature of what we're doing, there is a requirement to undertake that. And I just want to, I'm more than happy to accept the fact that if we have to do it, we do it because we have, not because we have to do it, we want to do it. But do we know whether there is a legal requirement for a consultation which is informal, no binding decisions are being made, that we have the same level of requirement?
Yeah, so this survey is at the discretion of the committee, and so I think that gives us the discretion to deal with it in the way that we feel is appropriate. But if that's what the committee wants us to do, then we will seek to do it. But I'm not quite sure how we would go about that. But I think, I mean, Rachel was, I think, going to come in and just to confirm that in terms of general communications, in terms of people's entitlement to their pensions and the way we deal with them, that the ones that we deal with by post and would not in any shape be disadvantaged by that
Yes.
situation.
That is correct. I did have suggestion that might help for future, but not for this survey. So I could mention that if you like, because we do have to, all those that have opted out of electronic communication from an administration angle, we do have to write to once a year, either for their annual benefit statement or for a pension newsletter. So next year when we do it, obviously we've gone past that for this year, but next year when we do it, we could add something in on both of those documents just to say for future surveys, if they want to be included, what you suggested, maybe an email or tell us that you'd like to be included. We could do something like that if that would help.
Sounds like a really good idea. A couple of councillors want to comment. I am concerned about the time, but okay, Councillor Dexter.
I thought that was a really good idea.
Yes.
Basically, and is the survey time critical, or could we just do that synchronized to this annual mail out? Because if it is, that is the answer without any problem at all.
Right. Councillor Rake.
I was going to make exactly the same point, Chair.
Yeah.
If we can synchronise the timings and actually put the survey in those envelopes, then that'd be great.
Yeah. Mark, do you want to come back on that?
Sorry, do that again.
Can we synchronise the survey with the annual post out to non-electronic people?
I think that would mean postponing it until Rachel will advise.
Yeah, I did think of that, but they're timed differently. So the pensioners get their newsletter at a different time to the annual benefit statement. So it wouldn't quite work for everybody.
Okay.
So the pensioner newsletter is April, the annual benefit statements are before.
So the aim was to do the survey this autumn. If you want to go down that route, then we would need to delay the survey until next year. That's, I think, what we're saying.
Yeah. Thanks, Andy.
And listening intently to all of the views, and I I take on board that £25,000 is a lot of money. However, if we can perhaps take away all your thoughts for next year's survey, and can I suggest that in the scheme of the £6 billion that the pension fund has, that we go ahead and post out this year, and then we bring back perhaps the equality impact and the timing issues for next year. Could I suggest that to the committee, Chair?
That's an excellent way of proceeding, because there are a lot of people. We are here to represent our members. We have a consultative meeting this afternoon. We're doing everything we can to get through and get feedback. So I think we ought to be as comprehensive as possible. Thank you.
Thank you, Roberta. I think that's a proposal for Part C. Thank you.
Can I just double check? Obviously, we do have an amendment and the original motion on the table. If there's consensus in the room, are you both happy to withdraw that proposal and amendment?
I am,
Or-
if colleagues are happy with the suggestion of the Director of Finance.
It looks like the room is happy to go that way. So Roberto's proposing.
Councillor Mitchell, sorry, Councillor, you're withdrawing. You're okay. That's fine. So sorry. So Roberto, you're proposing, Roberto, that we do send it out. Councillor Dempsey, your second. Sorry, I just wanted to make sure we're all on the same page there. So that's on the
Chair,
table
can
now.
we be assured next year when we get the report back from this, that in fact we get some data on the response from the mail out, so we appreciate if it made a difference or didn't make a difference to the returns?
Thanks very much, everybody. I think we've got a proposal that was likely to get the acceptance of the room. All those in favour, please show. And I think that's everybody. Anybody against? No abstentions. That's carried. Thank you. Well, thank you all very much. It's important, even though it's in a way minor. And we've got 4 or 5 more items to go, and the time is gone 12:30. When do we try to finish by? About 12:30.
Well, we have got Brunel people coming for the session that we would normally have after the meeting, but I think we're probably going to run out of time for that. And they are here,
Yeah.
but they are also here because they're going to do a presentation for the afternoon meeting. So if we don't get to them this morning, they were understanding that that might be the case and that they are going to present this afternoon, although slightly differently, but
We'll do the best we can.
Okay, well, as I'm sorry that they haven't been able to present to us as they've come all this way, but we'll be hearing from them this afternoon. We'll do the best we can in the meantime. Item number 12, Peninsula Pensions Administration update and performance statistics, and Rachel is going to lead on that.
Thank you, Chair. I shall be as brief and swift as possible. So this is the normal quarterly report that we provide, which gives an update on the performance statistics and also just a general update across the team. So we measure our performance against the Occupational and Personal Pension Scheme, Disclosure of Information Regulations 2013. So this is relating to Q1 of this year. So the performance we'll start with is April 25 to June 25. Appendix 1 provides information with a breakdown of all the different areas, but the overall performance was 95% in target across the whole workflow and 96% for high priority procedures. Just a quick reminder, the high priority procedures are actual retirements and survivors benefits that we bring into payment. So 96% for that. We had over that period 8 compliments from members around the service that they were provided with. The appendices even at the back. So on starting on page 150, that's giving you the breakdown of the high priority cases, and page 151. And if you go to page 153, you'll see sort of the performance over a longer period of time. So just so that you can see the outstanding work that we've got on the team for the Devon Pension Fund, we had in July 24, 6,670 pieces of work outstanding. This same sort of time this year is down to 5,735. So the workflow is being processed quicker, even though, as you'll see on page 154, we have actually received a considerable amount of more work over that same period. So we've managed to achieve that. Just a brief on the update side of things and what the team's been doing, just a brief update on McLeod. So page 148 refers briefly there to McLeod. So the team are working through the calculations. Any members that need their benefits reviewed, the team are working through at the minute. We had a deadline of 31st of August to get anyone that was due sort of extra money, so pensioners and survivors, monies out to them before the 31st of August. That was achieved bar one pensioner where we are waiting for some information from an employer, but we're on the case with that. So we will provide updates at each quarterly meeting as to how that's going. The rest of the calculations, the intention is that where they can be done, they'll be done by the 31st of March 2026. Pension dashboard, just a quick update on that. It doesn't actually say it in the statement, but we did actually manage to connect in advance of the deadline. So the deadline's the 31st of August this year for public service schemes, public sector schemes, sorry. We connected on the 11th of September for the main scheme benefits. So for the LGPS main scheme benefits, we still have to connect for anyone that's paying additional voluntary contributions by the 31st of October. But that is underway. The main scheme benefits are connected. That doesn't mean that individuals can look at the pension dashboard and see their information yet. This is stage one, so that there's some testing nationally that's able to happen and to make sure it's all working before it does go live to the general public. And that is a brief overview of the performance and where we are with different areas. I'm happy to take any questions.
Thank you. Not seeing any questions. Yes, Councillor Rake and then Councillor Dexter.
Thank you, Chair. And thank you, Rachel, for that presentation. My eye was particularly drawn to the our performance and the prioritisation of divorce calculations. As I'm sure you're aware, this delays in divorce calculations can often result in the people getting divorced from moving on with their new lives, and regrettably can result in partners being trapped in abusive or unsatisfactory living conditions. And so it saddens me to a degree that that they're considered a medium priority. Obviously, and hopefully in many cases it's a more amicable situation, but in extremis it can be a real problem. But I see that our performance on that has been improving, which I welcome, but I do think that's something that that we should bear in mind.
Thank you. And Councillor Dexter? And
Yeah.
sorry, Rachel, did you want to come back on that? Sorry.
Only to say that the reason they're medium is there's a longer statutory timescale to provide those. It's 3 months, whereas obviously with retirements and survivors, it's shorter, 1 or 2 months, depending on the circumstances. So that's why they're medium.
Okay. Thank you. Councillor Dexter.
Yeah, it's the number of cases of work completed has increased tremendously, but so has the work created. I think it's in here somewhere. I just wonder if you could remind me why there's a 10%, 20% increase in work created year on year.
Yeah, there's varying areas that have increased. A lot of the work where the increase is shorter term contracts and individuals leaving, and each time somebody leaves we have to calculate what they're actually entitled to at the time. That's the primary that's a primary change and why it's peaked.
Thank you. Is that okay? Yeah. Any other comments or questions? This report is just for noting, so if there's nothing else, it is so noted. Thank you very much, Rachel.
Thank you.
And then you're on again for the employer performance report, starting on page 155.
Thank you. Again, I'll give you a brief update. So we've separated into this part of the report out of the main update. So we've got a separate report on employer performance now so that you can see clearly. Because obviously there's a direct impact on the timing of information received by ourselves and how quickly we can then do calculations for individual members. So we thought it was important just to highlight that. We work in line with the pension administration strategy, which was updated last April and approved. Part of the administration, oh my goodness, my words, I'm trying to go too fast. The administration strategy was to actually included some charges. So although our priority is to engage with employers, work with them, give them training to help, there have been some employers that simply haven't engaged, which is why the potential of having the charges included was introduced. This report doesn't actually reflect this, but I can give you an update. We actually had about 450 outstanding employer inquiries between April 24 and March 25 for the Devon Fund. And there was a deadline given earlier for the 31st of August. And we now just have one employer and one outstanding query out of those 450. And that was because we used the process that if you don't get the information to us by X date, unfortunately, there would be a fine. So just to reassure you, it is now working and those numbers are coming down. A bit of there's on page 156 and goes on to 157. It just gives you a brief overview of employer updates, those new employers and those that have left the scheme, just for information. And then the charts, the appendices starting on page 158 will show you the total amount of leavers that we've received in that same period. And there's also, so we've had 2,096 leavers. We've had 1,976 starters in that same period, which is on the next appendix. So it's like 120 different, just to give you an idea of whether we're getting a lot more starters or a lot more leavers that month actually, or that quarter, sorry, is pretty similar. It breaks down the different reasons, as you'll see on the reasons for leaving on page 158. The majority of them are members with less than 2 years membership, which was what I was referring to a bit earlier with the short-term contracts. So the volumes of starters are shown on page 160, and it also is breaking down the priority leaver notifications and how it's just showing you sort of how long it takes for individual sort of for employers on average to get the information to us with those high priority areas. So the plan is that once we've got the outstanding data in, the queries from employers, and we've got that rolling on a 3-monthly basis and keeping those up to date, we will then delve deeper into the timings of receiving that data to make sure we can improve on that where we need to. And that's that. Happy to take any questions again.
Thank you very much, Rachel. Question there from Carl Hearn.
Just a very quick one, Rachel. On page 158, we've got a total number of leavers of 2,096, but at a very quick head count of the reasons for leaving comes to about 1,500. Is there another category which isn't actually listed on there? Or am I having a complete
I'm going to
miscount?
have to go away and check that because they should all be there. All the categories should be there. So I know there was a slight problem with the report. You might just see on the chart at the top, it's got a date in there, right at the bottom of the list, reason for leaving 1st of September 21. So this is automated information that comes in, and it is, I don't know what employer, I'm not going to point anyone out, but somebody has obviously typed the wrong thing in there, and that's why it's not categorized. I'll make sure that's corrected for future.
Thank you. Anything else? Don't see. Well, we're asked to note and review. The committee is asked to note and review that, and I think we have done. Thank you very much, Rachel. So the next item on the agenda is over to Charlotte Thompson, who's Head of Investments, Devon County Council, Pension Fund Risk Management, pages 161 onwards.
Thank you. So here are the risk registers for both the fund and Peninsula Pensions. If you look at the front page found on page 164, it explains the scoring system used. So the risks are scored before and after mitigating actions are taken into account. The risk register is reviewed in detail at every pension board meeting once a year at this committee meeting. So just to summarise some changes in the risk register over the last 12 months, officers have combined 2 high-level risks, which were categorised called risk F2 and F5 into one new risk, which is logged in the register under F15. As a view is taken that both were sort of similar. The new risk F15 can be found on page 175. Both as the previous risk related to the value investments going down due to poor performance because of stock market crash or underperforming strategy. Risk B4, which can be found on page 166, was added during the summer regarding the government's decision that Brunel would not continue. I scored this initially as a very high risk due to the potential for the fund to incur high costs in migrating the portfolios to another pool. The pooling arrangements will be discussed later on the agenda, though at this stage it's still too early to determine likely costs. Risk B3 has been updated to reflect the risk of Brunel staff leaving due to the current situation. One new risk has been added to the Peninsula Pension Risk Register regarding the issue of retention of experienced skilled staff, and this can be found on page 181 of the report pack. Happy to take any questions, Chair.
If I could just add that we're asking you to approve this, but it is a living document, so we will continue to make changes to it as and when required. So, but what we're really asking you as the ultimate sort of people responsible for overseeing the fund is that you are happy that we have captured all of the risks as far as we can within this.
Councillor Mitchell.
Just one question regarding to the layout. I sit on the Audit and Governance Committee on a district authority, and we have a similar corporate risk register, etc. there. The one difficulty I had as a member, which we've never introduced as a change, is that when we see go from one report for 6 months or 9 months or whatever, the next one, how to actually indicate on the report if a change has been made. Because we're left with a colour coding system, and you have a colour coding system as well. So you literally have to go back to the previous one to see if a red's gone to a green or whatever. And we've introduced a system of indication, so it highlights to members where a change of either improvement or deterioration is taking place between the current period and the previous period. And I just wonder whether we might consider adding that to the format of the report.
Yes, we are currently working with audit colleagues on how we present the risk register, and which will be taken to the pension board in October. So thank you for that feedback. I'll consider that in going forward.
Anybody else? No, I'm not seeing any further comments. Thank you very much. So on this item, we're asked to approve the pension fund register and the additional actions proposed to mitigate risk. Do I have a proposer to approve the pension fund register? Carl, thank you very much, Carl. Seconder, Councillor Mitchell. Everybody in favour? All those in favour? I think that's everybody. Nobody against? No abstentions? All in favour? Thank you all very much. Thank you, Charlotte. And we're briefly just going to touch on the future meetings because there's a slight amendment going on there.
Yeah, it's just we don't need to deal with it now, but I'm proposing, or it's being proposed, to move the November meeting of the committee from the 28th of November to the following Friday, the 5th of December, because it clashes with some award things. You don't need to let me know now, but if everyone could just note that, and if that is a problem for too many members, it won't go ahead. But that has been approved with the chair and vice chair.
My apologies for the 5th. I can't make that, unfortunately. Thank you.
Yeah, that's fine. I will have to go with the majority, but yeah, if it is a problem for anyone else, let me know and I'll go back to the drawing board on that.
I think that we now draw to a close the public section of the meeting, and we need to have a proposal to move into part B. I think, is that the way you do it?
Yeah, so we need a mover and a seconder of the recommendation that's on the front sheet, essentially that the press and public be excluded. A vote.
So moved, Chair.
Proposed by Councillor Rake, seconded Councillor Mitchell. All those in favour? That's carried. So we're moving into. We've now moving into part B, and you've got. I think they have to go, do they?
Yes. So
yeah.